Bitcoin and Ethereum decline amid U.S. stagflation concerns. The start of the new week brought mixed signals, leaving crypto traders and investors uncertain about the future price movements of cryptocurrencies, according to analysts from CoinDesk Indices. As the threat of stagflation looms on the horizon, a period of high inflation and low asset growth in the American market. A weaker than expected U.S. GDP figure at 1.6% points to a sluggish economy, while a higher core personal consumption expenditures (PCE) index at 3.4% warns investors of the escalating inflation issue, experts comment. On Monday, April 29, the value of the leading cryptocurrency by market capitalization dropped to levels close to mid-March, between $61,900 and $62,400. Over the weekly time frame, Bitcoin has lost about 6% of its initial value. In the last 24 hours, the decrease was approximately 2%. Ethereum is trading within the range of $2,800 to $3,200, which is 14% below mid-April levels. However, unlike Bitcoin, fluctuations in Ethereum's value are less volatile, and over the past 2 weeks, its price has been maintained within a range from $3,125 to $3,260. Amid these developments, the overall market capitalization of digital assets fell by 2.5% to $2.31 trillion. WordPress plugin vulnerabilities could lead to crypto asset theft. Cyber criminals are exploiting security flaws in WordPress plugins to launch virtual attacks on reputable websites, expert blogs, and private digital asset owner resources, warn specialists from Slowmist. These plugin vulnerabilities can be used to inject malicious JavaScript code into compromised online resources, initiating attacks on victims' crypto wallets. As a result, visitors to an infected website may encounter pop-ups designed to deceive them into executing malicious code and authorizing Web3 wallet signatures. This can lead to the theft of crypto assets. Slowmist experts recommend that web administrators conduct a thorough vulnerability assessment and update their WordPress plugins. They also advise digital asset holders to remain vigilant when browsing web pages, steer clear of downloading unknown software, and be wary of offers promising extraordinary returns. Australian Stock Exchange to approve Bitcoin ETF by end of 2024. Bitcoin investments are gaining popularity in Australia, as the country prepares to embrace Bitcoin ETFs soon, Bloomberg reported on April 29. It's noteworthy that the U.S. had already approved the country's first 11 spot Bitcoin ETFs in January. Since then, these funds have recorded a net inflow of about $12 billion. According to BlackRock, the iShares Bitcoin Trust, IBIT, is the most successful ETF of all time, now managing assets worth $17.5 billion. With a total of $53 billion held across various funds. Australia now aims to capitalize on the influx of institutional investors into Bitcoin. Compared to Hong Kong, there is even significant regulatory support expected here. VanEck is striving to register a Bitcoin ETF in Australia. The New York-based asset manager was among the first of the 11 Bitcoin ETF providers in the US and is already present in Europe. Investment opportunities for the American company and its competitors have existed here for many years, allowing investments in cryptocurrencies through the exchange. Under local legal norms, these funds are known as ETNs or ETPs. The launch of ETFs in the US gave the cryptocurrency market a substantial boost. Many investors hope that this trend will extend to other markets. So, when will Bitcoin funds be launched in Australia? Experts are confident that approval from Australian regulatory bodies will be obtained by the end of the year. Besides VanEck, several local asset managers have already submitted applications to create their own Bitcoin funds, including BetaShares and DigitalX. These projects have been under review by the Australian Securities and Investments Commission, ASIC, since February. Justin Arzadon from BetaShares indicated that current developments in Australia involve not just Bitcoin, but also Ethereum. BetaShares has also applied for a spot ETF for the second largest cryptocurrency. Jamie Hanna of VanEck believes the Australian market holds enormous potential for accelerating Bitcoin price growth. This allows investors to define their investments precisely. Consequently, there is an opportunity to rapidly capitalize on Bitcoin funds. Comparable funds listed on the much smaller CBOE exchange received approval in 2022, but only achieved moderate success. Solo Bitcoin miner creates block, earns 3.125 BTC. On April 28, Con Calivas, an engineer programmer and administrator of the CKPool Solo mining pool, announced on X that a miner had independently mined a Bitcoin block. This marks the 282nd time in Bitcoin's history that a block has been mined by a solo miner. Calivas added that at the time, the individual miner had a high hashing power of about 120 petahashes per second, ph/s, approximately 0.12 exahashes per second, EH/s, with an average speed of about 12 ph/s per week, representing roughly 0.02% of the total network hashing rate. On April 20th, the Bitcoin block reward was halved from 6.25 BTC to 3.125 BTC at block 840,000. Consequently, block 841,286 contained 3.125 BTC, valued at about $200,000 at the time of writing. Calivas analyzed the block resolution summary, suggesting that the miner switched from pool mining to solo mining after the halving, presumably because the pool no longer covered electricity costs, for a chance at a solo block, or he'd periodically hashed/leased significant amounts solo. This achievement is notable as mining a valid block solo is an extremely rare event, akin to winning a lottery. It occurs so infrequently that only 282 instances have been recorded out of 841,300 blocks created since Bitcoin's network inception 14 years ago. BTC mining requires participants to contribute computational power to solve and add the next block to the network. However, as the asset's price increased, so did mining popularity, leading to heightened competition and an increase in the mining difficulty target and network hash rate, making it nearly impossible to solve a block solo. In March 2023, it was reported that a solo miner received a 6.25 BTC reward for creating a block. However, prices were much lower then, making the reward about $150,000. The most recent block mine solo was created on April 5, just weeks before the halving, when a solo miner solved block 837,814 with a hash rate of 7 ph/s, earning a reward of approximately $422,750 at that time. According to BitInfoCharts, the current average network hash rate is 618 EH/s, having reached a record high of 728 EH/s on April 23. Over the last 12 months, it has increased by more than 90%, making the latest achievement in solo mining even more remarkable.